study,
and play come together on a Windows 11 PC.
And for a limited time, college students get
The best of both worlds.
Get the Unreal College Deal. Everything you need to study and play with select Windows 11 PCs. Eligible students get a year of Microsoft 365 Premium and a year of Xbox Game Pass Ultimate with a custom color Xbox wireless controller. Learn more at windows.com/student offer. While supplies last. Ends June 30th. Terms at aka.ms/collegepc.
When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
You look at anybody who's invested in the stock market. The day it is up, they feel good. Day it is down, they are unhappy. How many people do we know who have invested continuously for 30 years and not looked at it? Just buy some real estate and gold, at least you can't sell it every day.
Even when I tell people that you want the seatbelt of health insurance, I'm saying, what am I telling them? Because I don't know if the claim will come.
Check the customer's disclosures upfront. And if you find a fault, cancel the policy. No problem. After 3 years of the policy has continued, whether the customer has misdisclosed, whatever they have done, the claim must be paid. No more story. How easy it is for somebody to call you and say they are calling from an insurance company, take your money and give you a piece of paper that they call an insurance policy. How do you even know that's an insurance policy?
Hello and welcome to Why Not Mint Money, your go-to podcast for all things personal finance. I'm Monika Halan. I often wonder what would happen if the person selling a financial product was actually on my side. What if the distrust between the buyer and the seller was gone? What changes do we need to make in the marketplace as we embark on this journey towards Viksit Bharat? To talk about all of these issues, I have the perfect guest, somebody who changed the way we buy insurance and now is on his way to change the way we think about healthcare. Delighted to welcome Mr. Yashish Dahiya. He is the Chairman and Group CEO of PB Fintech, the parent company of Policy Bazaar, Paisa Bazaar, and Policy Bazaar UAE. Welcome, Yashish. Thank you for making time for this podcast.
Thank you.
I think you've been in this sector long enough, so I can ask you some big blue sky macro questions. We are on the road.
I'll try.
No, I'm sure. Look, everybody has views as to where the sector, where the country goes. And finance is the lifeblood of of the economy. It's the lifeblood. It's what makes things happen. We are on the road to Viksit Bharat. So we have a Prime Minister who's given us, the country, a certain goal that 30 trillion economy, we should be a developed country, but that's like a macro goal. How does this translate into our everyday lives, this sort of Viksit Bharat dream? Because in certain areas like payments, we are already Viksit. We are already where none of the developed countries might be.
Absolutely.
So what remains to be done, and what prevents us from replicating what we can do this?
Yeah.
Why not in the other areas?
See, I think if I was to break down all of financial services into two broad buckets, I think where we've made tremendous strides are, of course, payments. Today, you can have micro payments. You can go into a tea shop. I just went to a barber, paid 80 rupees, paid a 10 rupee tip, and it's all seamless, right? So that works very well. I think the second thing that's working very well is actually mutual funds. It's starting to work quite well. There's billions of dollars of retail consumers who are investing in that, and I think we've got very vibrant stock markets, amongst the most vibrant as a percentage of GDP, maybe alongside the US. So I think there are. Now, if you look at this broad theme, fixed deposits have always been there in India, and people have been able to utilize those very well. So as a broad theme, whenever you have simple products, investment products, or payments, it works very well. where do things get stuck and where do we have to make a big shift? Things get stuck whenever you're talking about risk, whether it is credit, whether it is insurance. And in insurance, I only mean health in term. I actually don't mean the savings part because that's a different part altogether. Now, what is the issue? Why do we have difficulty here? Because we have very low levels of penetration, extremely low, both in lending and in insurance. And what that means is roughly about 4 to 5% of our country can avail these products almost painlessly because they have the finances and they have the credit history and they have the paying ability. And for them, this is normal, right? I think where the problem starts is beyond that. Because to become Viksit Bharat, you at least need the next 30%, at least as a minimum. And the next 30% is 500 million people. In that zone, risk is an issue. Everybody cannot get a loan today. Now, when I talk about Viksit Bharat, there will be a time when people, if they want a loan, they just get it. There is no problem. If their child is going abroad to study, the fact that they have the admission is sufficient. There will already be mechanisms basis that admission on their paying back capacity. So I think credit will become available very easily. What would that imply? That would imply a whole lot of data sets coming together about individuals. And I think the account aggregator framework is a beautiful framework out there already. I think the same for insurance. Whether somebody is a diabetic, whether somebody has cancer, whether somebody has some illness or the other, it will be viable for them to get those products, even though they are in that condition. Now, what are the two requirements for that to happen? One, we need very broad-based penetration. Because if we stay at, today, how many credit cards do we have as a country? I think less than about 50 million. That accounts for about 3% of the population. And I'm assuming a lot of people have 2 cards, etc. How many people have health insurance? 60 million people have retail health insurance. How many people have term insurance? Maybe 15 million people. So again, whichever way you look at it at a family level, it is 3%, always 3%. The 3% is served, the 30% is not served. And the 30% is not served because our data layers, our risk assessment is not super clear. Also, there's disappointment when somebody does not get a loan. They feel like, why didn't I get it? I think that explanation, that education on risk, I believe, will take us to Viksit Bharat because your credit score is important. Your health situation is important. Your family's health condition is important. I think all of those pieces coming in, nobody's being unfair to anybody. It is just some things are important. And I think education plus data layers will take us there to Viksit Bharat, clearly.
Yeah. And it's very interesting to hear you talk about this whole data. Basically, data has to talk to each other and be accessible. And I think, again, Prime Minister Modi is really focused on data, and which is very good news to people like probably you and me, because I think he's saying we have to go from danda to data. So instead of using the force of, and he was using it in a different context. But I want to talk about this roadblocks to financialization. So you said that parts of the market in the investment space are working very well.
Investment payments works beautifully. Yeah. Risk does not work.
Does not work. But even in the investment space, there is this. So right now the conversation is, see, we were right. Look at the price of gold. And these are conversations that I have that, look, land is just a better investment. So, what are the roadblocks to this financial? So why should I go and trust this invisible product?
First of all, everybody does not have to. I consider myself fairly thought through. I see a lot of very smart people who are fairly thought through. And they have 20-30% of their holdings in gold and real estate. A lot of very smart, like all said and done, Blackstone has got one of the largest real estate funds in the world. So I don't see anything wrong with holding real estate. In fact, I think wealth in the world is only growing, but land is limited unless we go to Mars or Moon. So I think just because we have a view that that financial assets without backing, like without gold or without real estate, ought to be the way that circulation of the economy grows, that may or may not be the right thing for the consumers. If I look at consumers who've been able to hold value over a 30, 40-year period, and I'll come to why I believe that is the case, have done so through gold and real estate. Now, why are they unable to do that through equities? They should be. See, the human brain is wired for instant comfort.
Correct.
And you look at anybody who's invested in the stock market, the day it is up, they feel good. The day it is down, they are unhappy.
Correct.
And they feel like getting out of it. And thus, our mind is our biggest enemy. How many people do we know who have invested continuously for 30 years and not looked at it? I, by the way, am one of them. I do that. I don't look at it, right? But that's very rare. My own son can't do it. We have tension in the family when share prices are down. and we have a lot of joy when share prices are up. So I think we have to protect ourselves from ourselves. And that is why perhaps somebody said, you know what, just buy some real estate and gold, at least you can't sell it every day. And that lack of liquidity is perhaps its strength, that you can hold on to it.
Okay.
So claims is a standard. Nobody asks, ye company claim degi kya? That question doesn't exist.
Why?
Because there is a standard process. It's an accepted process. You can't breach that process. It's not allowed.
So the process is set in place
the process
by the
is
regulator.
fully set.
By the regulator.
It's not just set by the regulator, it's a market norm. If you don't adopt to it, you will be just dropped because the consumer has enough information.
I want to move to this fragmentation of the market. So when I go to especially a corporate hospital, the doctors don't talk to each other. The cardiologist will not talk to the nephrologist, who will not talk to somebody else. And obviously, these are lived experiences, right?
Yeah.
I feel like the financial sector is in a very similar place. As an individual, I need between 7 to 15 products for my entire financial life, starting from bank deposits, fixed deposits, insurances. So once I start counting, there are between 7 to 15 products. The market is set up in silos and in manners where even XYZ company, their credit card department doesn't talk to their banking department, doesn't
No, you're
talk
absolutely
to their,
right.
This is one company not talking. But now you flip it and look at it from my point of view. You're telling me that I need to access these, let's say 10 relationships individually. How do you solve for this fragmentation?
See, I think part of it is our fault, and part of it is a systemic thing which we have to mature to understand. Part of it is our fault because the consumer is operating in silos, as in one company or one entity is focused on one kind of product, right? For example, I understand the insurance industry extremely well. The insurance industry has forever been very, very focused on this savings / some kind of insurance wrapper product forever. That is the basis on which our largest companies are founded, right? And so for them to suddenly start thinking term, even after that product has been there for 15 years, is a challenge for our largest companies. They are still unable to think that what is required in that. And it again comes to the same thing. Even for a particular product, we have silos simply because there are different departments and the consumer is also treating them differently. The consumer is treating the credit card differently, is treating his banking relationship differently, is treating, and wherever there have been attempts to consolidate into one relationship, it hasn't always worked very well. And I'll explain why I say that. See, I think UPI is a great product, but it has a zero cost.
Correct.
Right? Which means today you've got two American companies with 80% of the market. They cannot make money from this. And that is why they have been able to do this. And I'm coming to a very important point. See, in micro lending, we sell insurance as micro lenders. The objective was lending, but we sell insurance. Actually, go and see how helpful that insurance is to anybody. The claims ratios will be less than 10%. It's not useful. I'm saying the secondary product, which is used to make money, is usually not good for the consumer. It's the same with banking.
Right.
The primary product is fixed deposits, but the moment you start selling insurance, it is no longer as. So I'm not I don't know. I don't know the answer whether this cross-sell approach. And I also feel we have an account aggregator framework. A lot of the data is inaccessible still to a lot of consumers, and a lot of this data belongs to the consumer. What are we trying to hoard it? Who are we trying to hoard it from? It is the consumer's data. We have to give it to the consumer. It's very straightforward.
Right. So you think this account aggregator, when scaled up, will actually be useful?
What is coming in the way of the account aggregator scaling up? Because everybody wants to have their own, every industry wants to have its own account aggregator. There is one account aggregator. Let's build on it. It's a national asset.
Correct.
There is one UPI. It's a national asset. Why are we trying to build in silos? Because we are building in silos.
Right. And again, just from my point of view, it would be far easier to have like a single window clearance for a firm.
Absolutely.
It would be just, and also, again, just from the consumer's point of view, people would just, they're just waiting for somebody who can come and do this. But that's a subsequent question. I want to just stay with this question of, you've spoken about this earlier, that there's a triangle of suspicion in healthcare. I think somewhere I've read between, the consumer, the firm, and the hospital. But I can extend this suspicion to the rest of the financial sector as well.
Everywhere.
Right? Because, again, the incentives are not aligned.
Absolutely.
For me, the key point over there really is this, the fact that we are not aligning the incentives of the buyer and seller. But I want to right now talk about, how do you use technology to build trust?
See, I think when you think about three things that are really required to scale up our financial services, one is trust. Second is, I would say, service at the point. And I'll give you a very simple example. In the UK, I have been driving forever. My family has lived there. And I have zero claims. So I have a policy which costs about £500. And my son became of age. He got a driving license. And so we had to add him onto the policy. Adding him onto the policy takes the price about 7x. Okay. But I understand it. Because he's 21 years old. He's high risk compared to me. I understand it fully. Second, who do I go and buy this policy from? I go and buy it from a company called Go Girl Insurance. I'm not a girl. My son is not a girl. But we buy it from a company called. Why do we have the courage to buy it from gogirl.com or whatever? I did not know that company till before that. Because every company's claims is exactly the same.
Okay.
So claims is a standard. Nobody asks, ye company claim degi kya? That question doesn't exist.
Why?
Because there is a standard process. It's an accepted process. You can't breach that process. It's not allowed.
So the process is set in place
by the regulator. The process is fully set.
By the regulator.
It's not just set by the regulator. It's a market norm. If you don't adopt to it, you will be just dropped because the consumer has enough information. It's a market norm. The regulator, of course, has some play in that, but it's a market norm. And there are set procedures that everybody follows. But in India, would you have the guts to buy a big financial product? Whatever, right? Doesn't matter which product. From company A versus company B, let's say company A is a top tier, top brand. Let me take two names, Tata or HDFC. And company B is somebody whom you've never heard of before. You won't. Because you basically say, hey, you know what? It's a question mark. That question mark is what needs to be solved if you need to get to scalable architectures.
Who will solve it? Is it the job of the regulator to put in guidelines? Because I don't see the industry coming together to do this.
If I was to say, I think that is one of the most important jobs of a regulator, to make sure that customer promises are kept.
Right.
It's a very simple thing.
Right.
Everybody, when they purchase, they came in, and I think once that is there, then automatically you will see different behavior, because your underwriting will become stronger.
Correct.
Because it's not an option. The claims is not an option. You better get it right at underwriting, but if you don't, the company is going to go bust, right? It will also not be an option to not control networks as well, as I see it. See, if you think of an insurance company, what does an insurance company do? Or a lender? A lender has two jobs. When they give you a loan, they have to assess your ability to pay back this loan. Right? And then they have to have the ability to collect this loan just in case you start to default. These two abilities are required. The same thing in insurance. I have to have the ability to assess you as a risk, and I have to be free in that assessment. But once I have assessed you, at the point of claim, I cannot have fungibility. I have to be able to settle the claim. It's as simple. And the customer must have absolute trust that claims and service are not two things that they will falter on. Otherwise, we will be continuing the cycle of lack of trust. But that is the hallmark of trust. And once that is there, everything else will follow. Your costs will come down, because clearly I don't need to think that which one. I don't need anybody's support at the point of claims. I don't need anybody's, the guidance levels will come down. Right. Now, lastly, I think there is a conflict of interest in fee for service, and when somebody is paying the bill. You cannot fight that conflict of interest. Any attempt that you believe, because a doctor is, you cannot challenge the doctor's decision. You simply can't. That has not happened anywhere in the world where you can challenge the doctor's decision, right? And so that is just a given. You have to. Now, how do companies manage this? They manage this by trying to control their network through steerage. How does the army control it? They basically say, you come to me first, I will tell you which hospital to go to. You don't go on your own unless it's an emergency, right? So my father, if he does not have an emergency, he has to. That's how CHS manages. That's how CGHS manages. So that is how you control you cannot control it. If he goes to the place, it's the other person's decision. And financially, we are very clear which way that decision lies.
No, I want to just keep a little bit more on this thing where you said that when the person goes to get that insurance claim, whether it's a car, whether it's a health, that payment must be made, and we are seeing sort of a market failure there. And would you agree that underwriting is happening at the time of claim rather than selling the policy?
A lot of it is. When I broadly speak, and I'll give you a simple example. If you look at credit underwriting, it is still very strict. Insurance underwriting is not so strict. It just isn't, right? Today, if you were to take a loan, is somebody going to give you a loan without actually looking at your bank statements, without actually looking at the underwriting is far stronger. Why? Because out there, the money flows out at the point of transaction. Out here, the money is flowing in at the point of transaction. So it is for the industry, it is convenient to move that decision to claims. Because at claims, you can check if the person said the right thing, etc., etc. Now, if it was not feasible to check, two things will happen, Monika. First of all, sales will become harder, not easier. If we think they'll become easier, they won't. But once the person has the product, there's that trust.
Correct.
that they have the product which delivers. And that will make sure that the wheels start moving faster. And the sales will pick up post that. It will be more expensive, trust me. See, I have the data. Like everybody else, 80% of our customers who buy health insurance do not claim for 10 years. 10 years. In fact, it's a little more than 80. So what does that mean? Only 15% of customers are doing all the claims. Now, this 15% of customers is accounting for, let's say, a 70% claims ratio. So you do appreciate what's going on here. So there is a bunch of people who need the product desperately. And there's a bunch of people, and that is what makes the market in an insurance category. It's the same thing with lending. Not everybody is a defaulter, but everybody has, there is, I think this, all I'm trying to say is, as we grow our financial services industry, understanding of risk and the processes that go behind it are very critical at every stage, whether it's the rule formers, whether it's the industry. Everybody needs to appreciate those very deeply.
Yeah, so I'm going to continue to push on this thing because I want that product where if I have my health insurance, I know that they will pay because that's what happens.
100%.
So
it should not even be a question.
Yeah, but it is a question in everybody's mind that
absolutely.
I'm paying premiums for, I don't know,
yeah,
for 30 years now.
I agree.
I have never made a claim because thankfully I've not had to. But
touch wood.
This fear that the day that I need it, I'm not sure that even somebody who knows the industry might be able to get. So I want to ask you, what do we need to change in the regulation?
Check the customer's disclosures upfront.
Underwriting at the point of sale.
You have, like has been done in life insurance. Okay, you have 2 years. In the first 2 years of the policy inception or of the person starting, because today you have, check whatever you want to. And if you find a fault, cancel the policy. No problem.
Right.
It's very simple. Give it 2 years, give it 3 years. You've given 3 years in life insurance. Give it 3 years. You have 3 years. After 3 years of the policy has continued, sorry, you don't have the option. Whether the customer has misdisclosed, whatever they have done, the claim must be paid. No more story. No more which hospital. Control your network.
So this is a regulatory intervention.
Control your network.
It's a regulatory intervention.
It has to be.
It has to be.
Control your network. But if in your network, the customer has gone somewhere and there's a bill, you've got to settle it. Sorry. You cannot now say, no, this was over treatment, this was over. If that is the case, change your network. Look, I think we have to take control as companies of our destination, right? And of the situation. We cannot say that this is a hospital's problem, this is the distributor's problem, this is the customer's problem. I don't have any problem. And I think we need to own two things. We need to own the underwriting and we need to own our network. If our network is misbehaving, we have to make sure we don't use that part of the network. There are 14,000 hospitals in this country. There are probably 40,000 garages in this country. You don't have to work with everybody.
Right.
Control your network. Work with the ones that you can trust.
One of the questions that I've had in my mind is that when I look at the market, I see a huge opportunity for somebody who can build this trust for all the financial products, not just insurance. And I have thought that possibly a bank might have been this one institution which has the consumer trust and also has the ability to vend products to them, but has not done that. They have maximized current income versus an annuity income of an increasing wallet share for the rest of the life of this customer.
I'm saying it's a hard job. We do it. It's a hard job. It's a very, very hard job because one entity cannot build trust across the system. Right?
Again, so it's a regulator job then, I would imagine.
No, I don't think that is the regulator's job.
Okay.
I think the regulator's job, I believe, is number one, claims is a non-negotiable. If you underwritten a product, you can have some underwriting period, but after that, it's a non-negotiable, right? It's just that's the reality. I think the second part, which I would say is very important, is suitability. See, I think that's what the part I was getting to, trust, service, and suitability. Because every product is not suitable to everybody. Right? I'll give you an example. We have decided, per se, not to sell any power products. We don't sell them. It's not like I don't get paid for them. We just don't sell them. It's a decision. We've taken that decision for the last 17 years. Now, appreciate that has financial loss to us, right? It's a decision we've taken. We pay the price for it, right? Because we think those products are too opaque or whatever, right? So I just feel, but it's our individual story. And if we are doing the right thing, we will get more and more customers. That cannot be, but I think suitability is very important. Is the product you are selling suitable for this person? Everybody wants to invest for 5 years.
Yeah.
Now, how do those, and that's what I'm saying, the customer is sometimes their own enemy, right? I don't come across those customers that say, I want to lock up my money for 20 years. And that's, again, a problem as we think about pensions. We're able to drive it through the corporate accounts, through the salary accounts, but individuals are not buying pensions.
Right.
Because they don't want to lock up their money for that long. It has always, all over the world, been run through tax incentives.
Right.
I have zero interest in this, but how do you drive a, our young economy will one day be an old economy. And what about pensions then? And so, I do believe there is a participation here from every player in the market, including the government, in enabling it.
Right.
If our car goes to somebody else's garage, that person has an interest in making money more than repairing the car.
Right.
And then making money can be, there's a dent, oh, I'll change the gate, or you had those 3 accidents, I will try to call them. And that is what is fraud. We should just call it simple, right? It is fraud.
So I want to pull on the suitability thread, because this is something that I have had in my head for a long time, that a buyer beware market in retail finance does not work, because a financial product is not a loaf of bread. It is not a car. It's invisible. Moment of truth is far away. It is
I totally agree.
Created in my mind when you describe it to me. So it has to be a seller beware, where suitability becomes the most difficult part. So there are 2 parts to it. One is you align incentives, which is, I think, far easier to do. How do you do suitability without straitjacketing the market too much? 5 things in suitability which you suggest, because we've grappled with the suitability issue.
Only one.
Tell.
Need analysis.
Okay.
You have to have done a certain amount of need analysis and be prepared to present that. It's just a normal thing. Every seller, whether they are offline, whether they are online, has to do, I met Monika. I assessed this. This is why I believe this product is suitable for her. It's normal. And that is the part which you say is right behavior. When they say you must act in the right behavior in the interest of the client, in the interest of the customer, if you're found to be too far off the line in that, that is a fault. And that is, again, suitability, something the regulator has to look at from time to time. So I, for every customer, need to do a need analysis. And actually, it doesn't need to be defined what is need analysis. It's pretty straightforward. I have to analyze. Okay, so this is Monika, this is her income, this is her situation, this is what, like we do a need analysis. For a loan, we check suitability of being able to return.
Right.
Similarly, you have to do a need analysis for any financial product. That is this product suitable for this? I'll give you an example. My father came to me, he was about 82 at one point, and he said, Yashish, I want to invest in the stock market because I'm hearing, very good returns and all. So I told him, Papa, ego batao, if you lose 20% of your money, will you be okay with that? कहते ना भाई, फिर तो दिल का दौरा पड़ जाएगा. तो मैंने कहा, then don't invest in the market. Suitability.
Correct.
But to my son, I say, invest everything in the market. You're 21 years old. Just keep a little bit for liquidity. Rest everything you have, keep putting in the market. Different people, different advice. It's contextual. It is depending on their situation, right? And I think that is just normal. I don't see what is wrong with that. Now, if the customer is saying, I want to invest for 5 years, then maybe certain products are not the right products. But that assessment has to be taken.
Right.
That how many years does the customer want to invest for?
And again, would there have to be a handshake between regulators so that suitability is defined in the same way across, because we have 4 financial sector regulators?
See, suitability is suitability. I'll explain what I mean, Monika. I think if we get too prescriptive,
that's my problem.
We will create a problem. But if we say it is your responsibility to do the right thing, then the right thing is vague. And it is vague, but it is also obvious. It's, you get me any situation, you can tell whether it was rightly done or wrongly done.
So maybe
and the regulator can at random check those.
Right.
That was it being followed. Maybe 3% of all sales at random are checked. Today you have AI. AI can check that at random. It can check it at scale. That was every sale when the suitability document is presented. Is the suitability how difficult is it? This is a suitability document. This is a sale that happened. Was it suitable? Not suitable. Suitability ratings for companies. Have you been selling suitable products or not? This is very easily doable. If nobody else wants to do it, I'd love to do this.
Okay, great. I want to move to one of the last things that we're talking about. So I'm sort of fascinated by what Elon Musk has managed to do. Steel in Boca Chica and rockets out. He's backward integrated the whole process. With PB Healthcare, something like that you're trying to do, set up your own hospitals. I'm sort of fascinated. I think the Kaiser model in the US works like that, because right now there is a complete lack of trust in buying a health insurance product. Even when I tell people that you want the seatbelt of health insurance, I'm saying, what am I telling them? Because I don't know if the claim will come.
See, when I started Policy Bazaar back in 2008, a lot of people thought we should focus on the front end, right? I focus a lot on the back end because I believe customer service, claims, this industry works backwards. If you solve the back end, the front end can be solved. Correct. We have 150 garages. Why do we have them? I don't enjoy running garages, right? We have them because we believe if our car goes to somebody else's garage, that person has an interest in making money more than repairing the car.
Right.
And then making money can be, there's a dent, I'll change the gate, or you had those 3 accidents, I will try to call. And that is what is fraud. We should just call it simple, right? It is fraud. It is actually cheating, right? So we said, listen, you can't trust anyone else, but you can trust yourself. So we put our own garages where the customer cars comes, it gets turned around fast. We will not be right all the time. Sometimes we get it wrong. Sometimes the customer's car will be stuck for longer. We're not perfect, but we're aligned. Because we're aligned, we're doing the right thing for the consumer. Because we want to get the car back to him, want to get it faster to him, etc., etc. It's pretty much the same thinking. See, I grew up as an army officer's child. I used to go to hospital all the time. And whenever we went, we never asked who the doctor is. He's a qualified doctor. He's able to take care of me. Why do I need to know who my doctor is? Because in the army, you don't do that, right? You just get treated. I then lived in the UK for 10 years. It was the same. I could not say, no, I don't want to get treated by Monika. I want to get treated by Apeksha. No, not possible. If your appointment is Monika, Monika will treat you, right? It's as simple as that. And now, I think the model here has, the fee for service has its problems. Basically, it's very clear every hospital is tracked on RPOPs. It's tracked on, and it should be. I'm not saying it should not be, because that's their model. But, and I'll share one more thing. What is the strength of the insurance industry, which the insurance industry is not understanding? I just said for 10 years, 80% of people have not claimed.
Correct.
That 80% is not going and paying hospitals. Right. But that 80% is coming and putting a certain amount of money every year into the insurance industry. And thus the insurance industry has customers who pay and are not claiming, and customers who have a lot of claims. Only the lot of claims, if insurance industry wasn't there, only the lot of claims would go to hospitals, right? So I think it's 10-15% of customers who, and you need to have essentially this model where you can go to any hospital, use whatever, I think is flawed. I think you need to have the right to control your network. And whether it's 500 hospitals, it should be sufficient. If it's not sufficient, people will not buy from you. But it needs to be a network. And whether it's 500, whether it's 2,000, and that network needs to value you, needs to value that it needs to be responsible to you. Not that it doesn't need to be responsible to you. I think, look, the conflict is very clear. I think the way to address this conflict is by participating in the, how does Bupa handle this? 25% of their customers, they send to their own hospitals. Those act like benchmarks. We're in a way trying to do the same thing. Where what we're saying is, listen, for the industry, let's create a shared network of about 150, 200 hospitals where most of the customers can go for most of the illnesses, specifically for planned illnesses. And if it's an unplanned illness, it's an emergency, they can go anywhere.
Okay.
And I guess when at every renewal, the prices are going up, the customer can be explained that, listen, if you choose a narrower network, there will be a discount available. But more importantly, your claims will become a more seamless process. So I think there is a bunch of customers that prefer that. That, listen, I will not have a difficulty at the point of claim because I'm a trusted part of the network. I will not have a difficulty in terms of price increases because, again, it's a trusted part of the network. See, I'll give you a simple answer. When I look at myself as a company, we'll have about 40 million health insurance paying customers by, let's say, 2030, 31 sometime, right? In today's dynamic, they require 32,000 beds. I'm trying to see if I can do that with 16,000. That's fundamentally what I'm trying to do. Now, that 16,000 doesn't need to be owned by me. It can be part of a network. It can be, but I need those 16,000 beds to behave like they're a participant in this. Not behave like they have to make money out of this. They have to behave like a participant out of this, where they are working towards treating the customer and getting the customer out as soon as possible, rather than the opposite.
Right. And so the model that I understand is that there are doctors. So your first line of reference is the doctor in the network.
Yes.
And then only if you need secondary, tertiary, do you get
as you need, it's basically care pathways.
Yeah.
As you need the care pathway, you are directed to that place.
Okay.
And you're given options. You're given multiple options. But yes, it's not, you can go anywhere. That, if you want that, then it'll be very expensive.
Right.
But otherwise...
And out of network, suppose there's a specific injury and...
You can always go out of network.
No,
so
but then I don't have cover.
No. So typically the way this gets handled in the countries that have done this kind of model is you have a copay element.
Okay.
So you say, okay, in network, there is no copay.
Okay.
But if you want to go out of the network, you have a 20... See, you have to also make the customer a participant in this.
Okay.
Or you have a deductible. That, listen, the first 25,000 rupees you will pay. After that, you can... Do appreciate, I use that 25,000 rupees because most of the fraudulent claims are actually less than 25,000 rupees. Like where the person may not even been to a hospital.
Gotcha. Last question. This is really on safety. We're already dealing with crores, thousands of crores in this whole digital scam. And now quantum computing is, I think, down the road. And I'm already listening to things like harvest now, decrypt later kind of attacks, which are... We are beginning to hear about this. They're just harvesting all the information so that they can decrypt. Now, already within the system that we have, people are losing thousands of crores. Are we prepared for this to happen?
I think, first of all, thinking about this, gold and real estate wasn't bad. Because, in fact, that's one of the reasons why I stay a bit in real estate. Because, I, for example, have an IBKR account. What if it gets hacked? What do I do?
Yes.
And so I think it's important. Once I asked the private banker that, can you show me proof that those shares are actually held in my name? By the way, they were also holding it in some kind of cumulative base. So ETFs, etc. There's a lot of things which can go wrong. And I'm not trying to scaremonger here.
Yeah.
But a lot of things can go wrong. And thus, having some of your feet on the real side is not a bad idea. I know that doesn't, grow the economy as much, etc. But look, we don't have to follow every pattern that the West has followed. We can have our own patterns. And our people need a certain... Second thing is authentication, trust. See, just like you wouldn't, as I said, you would be very comfortable perhaps buying a product from an HDFC Tata, but not from everybody. Authentication, is the person you are dealing with actually the person that you think they are? I think authentication services today, India has done a lot of work on this, but they are a must. Because in the middle, you had people calling up, I'm the regulator, people calling up, I am Policy Bazaar, I am HDFC. Now, you need to figure out, are they or are they not?
Yeah.
And there are very clear mechanisms out there. Like, for example, in our system, there is a mechanism. Any person who's speaking to you saying they are policy, you can verify on the website itself. You just ask them for their employee ID. You type in that employee ID in the website, and a code will go to them, which they have to tell you.
Okay.
It's very simple.
Yeah.
Everybody can implement this, but I think that is where comes the difference of trusted solutions rather than untrusted solutions. And I think, but it's a very, very real fear out there. And even within trusted solutions, you will have more trusted solutions and less trusted solutions.
But is the financial sector thinking about these thoughts, or?
They are.
They are.
I'm sure they are. But I think education is very important. Like what I just told you, the reality is 80% of our customers don't even know this exists. And, they may get, while we make every attempt to put it on the website and explain it to people, etc., but 80% of people do not know. In fact, I go to say 90% do not know. And if they know, they can prevent themselves from any kind of fraud. How easy it is for somebody to call you and say they are calling from an insurance company, take your money, and give you a piece of paper that they call an insurance policy. How do you even know that's an insurance policy?
So my worry is that without quantum, we are where we are with all the digital arrests and all of the scam messages. So every day there is some message which is trying to get to your money. And the day that they can decrypt my passwords, then it's actually a very scary thing.
I do tend to agree. Some of the things I follow is diversification across trusted networks, but it's a big fear. There's no doubt about it. It's a big fear. And some of the things I do are exactly what I said, real estate and gold, which is opposite of what you would hear from a lot of places.
Correct.
But the reason a lot of smart people do that is because it is real. You hold it.
Right. No, absolutely wonderful. So what I'm taking away is really that we need some regulatory red lines on the ground in terms of suitability, in terms of claims, and also possibly corporate behavior. That's the second leg. And third is for even the customers to do a little bit of research. Give up this idea that returns are quick. At least define what you want.
I also feel as a government, we need to stop having a capacity approach and we need to start having a data approach. What is a capacity approach? You are big, so just go ahead and do it. Right? You are big, so just give insurance to everybody. You are big, so give loans to everybody. Right? I think it has to be data-led. Yes, we can get scientific about how to help people who are not qualifying get on the ladder. But again, scientifically, not through capacity, through data. And I think that way we'll be fine. Otherwise, because nobody has capacity to kind of really handle our country.
Right. Thank you very much.
Thank you.
Absolute pleasure talking to you.
Thank you.
Thank you. As India travels towards Viksit Bharat, this journey must have the individual as a partner and not a victim of the financial sector. And everybody needs to participate on this journey. Do tell me what you liked about this conversation in the comments. Keep watching Why Not Mint Money.